Hello guys, welcome back to ESENtaxa. Andrea Papito here, and in this video we are going to discuss about owning a property abroad while you're tax resident in Italy in 2024. If you're in this channel, ESENtaxa talks about how to optimize taxes in Italy if you want to relocate in this country. We also cover Belgium as a jurisdiction. We optimize the taxes, we tax simulate your situation before I had the relocation to those countries, and we check with you if the relocation makes sense for you, and we see together how we can optimize the taxes as much as possible. Of course, everything can be done through a tax consultancy with us. In the description below the video you'll have our calendar link to book a call, 20 minutes, 1 hour call, or a tax simulation project. And basically this is extremely important to start the tax-wise, gathering the information tax-wise in this country, and then we also provide accounting service so we can assist you throughout the entire journey in Italy or in Belgium. In this specific video, I wanted to discuss about a situation, classical one. Whenever you move in a certain country, you bring with you all your incomes, so all the new incomes needs to be taxed in the new country of residence. But some of those incomes comes with assets. So you have financial assets abroad or property abroad. So real estate, for example, is the classical one. I have some real estate under rent, I receive income, and then how this income will be taxed in Italy or in Belgium, okay? So it's a classical situation. A lot of our clients have this problem, and we need to understand how will be the tax burden on this type of income. And what is the effect, because we are going to accumulate this income with the professional income that most likely you are going to perform in Italy, or your pension that you're going to receive from your country of origin, okay? So let's imagine this scenario. It's a classical one where I move from, for example, country X and I move to Italy, so I become tax resident in Italy here. My worldwide income, it's taxed in Italy. But I have also the obligation of monitoring my assets abroad, physical assets, financial assets, and some of those assets, by Italian law, I have to pay wealth tax on it, okay? Now, let's focus on real estate. I have my house, let's draw a house here, under rent, and in Italy, what I have to do, I have to first monitor. Monitor means simply write on the tax file return, let's say filling out a box, a certain line which I declare that I have a property abroad, simply like that. Monitor in a specific module called RW. I have to pay the EVA tax, because here we are talking about the property. There is a specific wealth tax for property owned abroad while Italian tax resident. And this is now in 2024, it's 1.06% of a certain value. It's not always the value of the home, but can be cadastral value, cost of value, market value based on the country. And this we're going to discuss quickly and in details about this point. And third things to have to consider is the rental income. Okay? Now, where we can see if your property makes sense or not. What does it mean make sense? Your rental income from abroad coming from the property makes sense for you or not while you're Italian tax resident, because sometimes the amount of tax that you have to pay will make your investment abroad not worth it anymore. That could be a case. And where are the situations, and this is not really a tax optimization, is about to know in advance how the rules are in order to understand if it makes sense to sell this property and use this money to purchase a property in Italy where the taxation is completely different, or in another country. And when I explain you why, so the tax optimization here, the optimization in general is to maybe relocate the investment in another country while tax resident in Italy. And why I explain you why. So here there is nothing to be worried about. Here is simply monitoring my asset abroad. Fine. Here it's based on, as I said before, based on the situation where the country has an agreement with Italy where the EVA tax, the annual property tax to be paid for your property abroad, which is actually, it's a wealth tax. Italy cannot impose a property tax on houses located in a different country. They call it like this, but actually it's a wealth tax on property owned abroad. You pay this tax 1.0% on the either value of the property, cadastral value of the property, and normally the cadastral value is the number that has to be taken into account where your property is located in European Union. Okay? When your property is located outside European Union, normally with Italy, you can either consider the cost of the property or if it's not available, the market value of the house. Okay? And in the consultancy, we can check together which one is the correct value to be taken into account to pay the EVA tax. Okay? Now, this tax, of course, can be subtracted with the annual property tax that you pay locally. So, if you have your property in a country that obliges you to pay an annual property tax, you simply subtract this tax from the EVA tax. That's it. So if there is nothing, if it's zero, you basically, or let's say, if the taxes abroad is higher than this calculation, this tax, there is nothing to be paid. Otherwise, if it's lower, then you have to just pay the difference to the Italian state. Okay? So this is also the calculation, this 1.0%, it's a value that has to be calculated with a number, and we have to understand where is this number, okay? In which country, take into account the correct number. The third point, and it's the most important one, is a rental income. Okay, now, I put my property under rent abroad, I receive every month an amount of money, and this amount of money probably will be taxed in the country of origin, so it will be taxed in the country of origin, or can be not taxed, so taxed in the country X, or not taxed in the country X, okay? There are these two possibilities. You might have your property in a country that doesn't impose any taxes on your rental income. Now, if your rental income is taxed in a country where you have your property, then the value that you are receiving, the value that actually you are declaring in that country, you have to be very careful with these details. The value that you have declared in a country where your property is located, so basically you have transmitted the tax file return as a non-resident, because you're not living anymore there, non-tax resident for that country, and you have declared the amount of income that you have received. Some countries, they don't ask you to declare the entire rental income, but the rental income minus expenses, forfait deduction, certain allowances. So the number that you declare in the tax file return in the country where your property is located is the same number that you have to report in the Italian tax file return for your foreign rental income. Okay, so this number, this X number, say rental income abroad, has to match exactly with Italian rental income, okay? Has to be exactly the same. So the number that you declare abroad has to be reported in the Italian tax file return. This happens when the country where your property is located provides taxation on it, because they want that you declare the income because you want to tax it. They want to apply that withholding tax on it, okay? They ask you to pay 10%, 20%, whatever. But this number has to be reported to the Italian tax file return, because then you can calculate the Italian taxes on this number, you calculate the Italian RPF, the progressive taxation, and then you subtract what you have already paid in the country where your property is located. The other solution is that the foreign country doesn't apply any taxes, and then you declare everything in Italy, in the Italian tax file return, minus a 50% allowance. Okay? So these are the two scenarios. So 50% is tax-free in terms of allowance. Italy considers you an allowance. What remains will be taxed entirely in Italy, will be accumulated to the Italian global worldwide income. Okay? So this is how it works for rental income. Now, as I said at the beginning of the video, why it's so important to determine the country where to invest the property, where is the property is located? Because if you have a country, for example, I can give an example, Belgium, where we have we cover this jurisdiction, so we know very well the rules in Belgium when you have a property there. Belgium doesn't tax your real effective received income. Tax only your cadastral income indexed multiply a certain coefficient. What does it mean? It means that in Belgium, if I receive 12,000 euro per year as income, I declare not 12,000 but only 1,200, more or less, just to give you an idea. and the only 1,200 is a number that you report in Italian tax file return. But if Belgium didn't tax this type of income at all, then 12,000 has to be reported to Italian tax file return. You see? So if that country, the country abroad provides a certain level of deduction, a certain level of exclusion, but still oblige you to provide a tax file return abroad, then you have the chance to reduce, to have your rental income so low taxed that still makes your investment convenient even though you moved in Italy. I don't know if you understood me correctly. So sometimes it's better to check in advance with the tax simulation how much will be the taxation in Italy, how is the agreement between Italy and the country where your property is located, to see what is the margin of taxation of your rental income abroad, because at the top of it we have to also consider the EVA tax, okay, which is the annual property tax for property detained abroad. I hope I was clear. This kind of double taxation issues are very complex, so we try to make it as simple as possible in ESENtaxa, but every case has to be analyzed one by one. So here we give you ideas, situations, generally speaking. We try to understand, we try to explain you concepts, but when you need a specific check in your situation, we need to see exactly which number are coming up from the tax simulation or from the consultancy. So if you like this kind of content, as always, like button, notification bell, and subscribe to the channel to help us grow and to be always updated whenever we release this kind of information. Thank you for watching. See you the next time. Bye.